Help, I've fallen and I can't get up. That's coming up on 3 Minutes on Markets and Money. After a tough week last week, culminating with options expiration on Friday, markets did bounce yesterday after a long weekend with indexes up really 2% or more across the board. Looked like we had a nice little bounce here going on from a 3 standard deviation oversold condition here. Again, we talked about the fact that sell signals still in place now, but extremely oversold and markets oversold as well. So again, we were kind of looking for a bit of a reflexive bounce this week. Doesn't look like it's going to occur today at the open anyway. Markets are currently pointing down at the open this morning with all indexes down about 1%. We'll see if this early morning sell-off is going to hold, but markets are having a very, very tough time generating any type of lift. And again, as we talked about yesterday, every time there's a rally, people that got trapped into the sell-off are looking to make an exit from the market. This keeps prices suppressed. We saw this previously. The market kind of flopped around for almost 3 weeks before actually getting a bounce. We got a very minor bounce, another bit of consolidation before the next down leg to the market. And this has pretty much been the action all year long. Consolidations lead to failures. Consolidations also lead to short-term increases, but it's been this stair-step pattern all year long. Going all the way back, we just continue in this downtrend of the markets currently, and that's making it very difficult for traders here to take on positions and expect to try to make a return because, again, every time you try to bring on a position to try to take advantage of a market bounce, the bounce is very short-lived, and the reversals are so quick and so vicious, it gives you very little time to exit markets. So again, one of the things that we continue to encourage here is to use rallies to reduce risk, raise some cash, rebalance portfolios accordingly. And talking about other problems in the markets, we're starting to see that show up in oil stocks and oil prices as well. Yesterday, we posted an article on our website, realinvestmentadvice.com, talking about oil prices and what happens to oil prices after big spikes. And of course, there's a very high correlation between oil prices and inflation. And just talking about ultimately this leads to a big correction in oil prices. Now, I wrote that article over the weekend, posted it yesterday, and oil prices already under a big attack here over the course of just the last few trading days. And importantly, oil prices down about another 4% today, under a good bit of pressure here after this big run up in prices previously. Now, this is not surprising, of course, as is always the issue with commodity trading in general. These are those futures traders out there, and at some point, things get a little bit ahead of themselves. And when the selling starts, it tends to be a bit vicious. So as we look at this, we're still on sell signals currently in oil prices. This suggests lower oil prices currently, but oil prices are getting fairly oversold here. So again, probably somewhere around $96 to $100 a barrel. I'd look for a bounce in oil prices. The question will then be, of course, if oil prices can retrace and move to new highs, or if we're beginning to start a building pattern of lower prices as we see the economy slow down, demand slow down. One of the things we talked about previously is a reduction in demand this summer because of high oil prices, people cutting back on traveling and driving. Normally in a period of time where you have higher demand, we're going to see lower demand. That could lead to lower oil prices as well. So one thing we've been encouraging is to take profits in energy stocks. Now, again, the sell-off here is getting a little bit ahead of itself, so use bounces in oil prices and energy stocks as a point to rebalance risk, reduce exposure, take profits. That's 3 Minutes on Markets and Money today. See you back here tomorrow.